afternoon, everyone. My name is Brian Kelly. I am the head of investor relations at MarketX Ventures. It is my distinct pleasure to welcome you all back to our bi-weekly webinar series. For those of you that are new to MarketX, we are a tech-enabled investment manager and end-to-end fintech platform that provides our clients with a streamlined way to gain access to, evaluate, and exit opportunities in growth and late-stage pre-IPO private companies. The firm was founded by Cathryn in 2015 with a broader mission to address growing liquidity needs and access inequity within the venture asset class. MarketX was built globally from the ground up with an initial focus on Asia and the US markets and has ultimately expanded into deals across the globe. We have worked with over 300 family offices, high net worth individuals and institutions, and currently manage 125 million in AUM. Today, our head of investments, Mike Bai, and CEO Cathryn will be discussing Shipper, an asset-light e-commerce logistics platform for merchants in Indonesia to ship, fulfill, and manage their inventory and other operations using the company's suite of software products. We are extremely excited to be investing in the company's latest Series C primary round through our fund, and our remaining allocation is available for co-investment in an on-cap table MarketX SPV. This deal is set to close next week. Before I turn it over to Mike and Cathryn to discuss this very high conviction idea, I want to highlight a secondary opportunity that we have available in SpaceX. We are syndicating $10 million at $70 per share in a second layer SPV. If you have an interest in this deal or would like additional information on our pre-IPO investment platform, please contact us at business@themarketx.com. I'll now turn it over to Mike and Cathryn.
Thanks, Brian. Thanks, everyone, for joining us today. And I have a pleasure to introduce my colleague, Mike, as the lead on this webinar. So Mike joined us recently, and previously Mike has been running his own also syndication group. Also would love to learn more about Mike's background. Please give us a little intro about yourself.
Hi, everyone. It's nice to meet you all, and thank you for joining. My name is Mike Bai, and I'm excited to join MarketX to lead the investment team. My background is very diverse. It's basically a combination of entrepreneurship as well as finance. I've started successful and unsuccessful companies, so definitely know that world very, very well. I was previously in the VC world in Silicon Valley, investing in deep tech, early stage, as well as enterprise SaaS. But my entrepreneurship experience also is involved in Asia as well as in consumer business as well. So I'm really happy to help out in MarketX Ventures and try to look for the best deals that are always in the market. I mean, perhaps I can give a quick overview of how we're looking at the current market. As everyone knows, the current market is very tumultuous. There's a lot of turbulence in both public markets as well as private valuations. So therefore, we've been very selective in looking at deals both in the primary and the secondary market. We really believe that there is a downturn coming, and you can see that with private valuations. Growth valuations are already coming down, and there's a lot of challenges with respect to pricing it properly. And then on the early stage, you see more deals being done. Part of that reason is you see Tiger, SoftBank, and all these hedge fund managers were originally coming into the growth stage, leaving because their hedge funds have been hit really hard due to valuation challenges in the past 3 to 6 months. So for our perspective, we really believe that finding the right deals at the right valuations that are kind of resilient to the current downturn is the current focus. Perhaps Cathryn, if she's back online, can share a little bit more.
Echoing with what Mike has brought up, the current market definitely has took a sharp, turn, and what we see is that now is the time to go for the right deals. A lot of activity are still happening. There's a unprecedented demand for sellers to present themselves in the market. Granted, on the buyer side, we're looking at anywhere between a 15 to 25, 35% discount on the deals. So we're very excited to bring you the quality deals we have. So with that, I'd like to start today's webinar on Shipper, which is Indonesia's largest e-commerce logistics play. The company has been around for the last 4 or 5 years, and we see that overall Indonesia is a very exciting market. I actually personally met the CEO, Phil, from Shipper several years ago when he was still a venture capitalist in Silicon Valley. We had a great conversation about what the future, for him looks like, and he said he's very excited to be an entrepreneur. Shortly after that, he decided to move back to Southeast Asia. He's actually, from Thailand before, so it's quite exciting journey for him to start this business in the hottest, region in Southeast Asia. Indonesia is home for 300 million people, and with e-commerce growing, we see the need for logistics and shipping. This logistics play has proved to be very profitable, and we have seen large players like Shopee, Tokopedia, e-commerce giants to really succeed in this region. And we believe Shipper is positioned to achieve great heights. So with that, Mike, can you walk us through the overall landscape and why we believe, the e-commerce logistics play is here to stay?
Yeah, absolutely. Maybe I'll share one quick slide for you and talk about Indonesia. So when think about deals, we really want to start with the market, top-down approach to understand how the market is, the dynamics of the market is how the market is growing and changing. So one of the big things for those who don't understand the Indonesian market, we're not exposed to it that much, is that Indonesia is one of the biggest economies in the world. I think it's 9th in the world in terms of GDP, GDP total, and it has about 270, almost 300 million population. It's archipelago where it has 5 large islands from Borneo and New Guinea in the center and the east, and on Sumatra on the west. It also has a very interesting 20,000 different smaller islands that are part of the country. So this dynamic itself creates a very interesting situation with respect to e-commerce, where a lot of the small islands have a challenge in inventory with respect to normal day-to-day products. They have less selection, and oftentimes is more expensive. So e-commerce actually works very well with this geography, where people in different outlying areas can actually order something that's cheaper and better than the things that they have locally on the island. Another kind of macro understanding of Indonesia is that it's a very young demographic. The average age is about 30 in terms of median age, and they're also kind of growing in terms of income per capita. So right now it's considered a middle income country with about $4,000 per annum per person. And that's actually growing very well. So in Q1 of this year, they grew about 5%, and this year they're averaging about 5% GDP growth this year. The country also is digitally native, which means that they passed over the computer and went directly to digital, which means that they're very active online. They're very comfortable with e-commerce, and the penetration rate of mobile phones is very, very high at 73%, I want to say. So it's a very interesting market for both e-commerce as well as the development of the consumer. And then finally, with respect to the current situation, whether it's the Ukraine war, whether it's the current inflation that we're experiencing, as well as the commodity prices going up, Indonesia is actually a very large supplier of coal, of palm oil, as well as nickel and other commodities. And the price going up has really helped them increase their trade surplus. So right now, the consumer is very strong in Indonesia, and we're seeing a really strong growth in e-commerce from about $43 billion last year as a total market size of e-commerce to about $59 billion this year. And then people are projecting it to get to about 85 to 90 billion by 2025. So we really want to ride that wave in terms of market growth and consumer growth. Cathryn, perhaps you can share more about the, the the other ways that you know the business and how you started interacting with them in early days.
Sure. So actually with Shipper, we spend a lot of time looking at Indonesia as a, country where there's a lot of innovation. In 2017, I actually went to Indonesia for the first time, visiting Gojek, which is the Uber of Southeast Asia. At the time, there's very few logistics players. Being starting with the e-scooters, starting with the ride sharing business, the company has grew tremendously, and then with fintech as part of the play, so Gojek decided to create the Go wallet, which is similar to a credit card, because at the time in Indonesia had a 3% credit card penetration rate. So we knew that starting a logistics place business along with developing a fintech play can be tremendously successful in this business. What I really find similar to the Gojek business when it comes to Shipper is that they started out as must have for the e-commerce players to have logistics, to have fulfillment centers ready, but also building a SaaS tool that can help these businesses grow. On top of that, starting also a financing option for these e-commerce players. So it's very similar to what I've seen the growth of Gojek. And with that, Mike, I would love to understand a bit more about how Shipper got started and where do you see it going in the next 35 years?
Yeah, absolutely. So one of the things from my experience that really fits well to understanding Gojek is, sorry, not Shipper. Gojek is a different company in Indonesia. It's actually my experience at Amazon back in the day. So I was a product manager at Amazon after business school. And one of the most important aspects of Amazon's business model is what you see here. And basically, overall, you kind of understand Amazon's business model as, they do AWS, they do a lot of e-commerce, but they drew out their whole process and you can understand how they grow. So here you can see that you really start with the idea of selection, right? So this is their virtuous cycle. You start with selection. They started with books, of course, and CDs, etc. And after you have a large selection of various products, you give consumers on the right a very solid experience. So the consumer experience is really critical. The better the consumer experience, the higher the traffic is to the website, and therefore the sellers come onto the website to sell their goods, which also increases the selection of goods on the platform, which improves customer experience, et cetera, et cetera, et cetera. So as this flywheel grows and goes faster, it creates growth in the middle. So then what Amazon does is that with that growth, they invest into more warehouses, more fulfillment facilities to lower the cost structure of the fixed assets and then be able to lower prices for the consumer, which feeds back into this virtuous cycle. So this is Amazon's business model and the business model of most e-commerce platforms that are out there. So why do I bring this up? Well, the important part of what Shipper is doing, their logistics play, is that right now they're really focusing on sellers and helping them be able to have a low cost structure, low prices, and then improve their customer experience. So that customer experience is really built on the need to have very fast shipping as soon as possible and very dependable shipping, right? So if you have Amazon Prime, and I assume a lot of people do, you understand the difference between having something within a day or two versus having something in a week or two. And that is a big challenge for Indonesia. So what you see, so the company itself has a couple of different businesses, right? The first thing is that given how big Indonesia is, they have a lot of carriers, different shipping companies, like a FedEx, you would think, that needs to cover different areas. So Shipper has integrated with about 100 different companies that are carrying their product to the end user. So typically in the US, you have very good coverage, but Indonesia, because it's so large and so different, so many different islands, you have a lot of smaller carriers serving various places. So Shipper is able to aggregate that information and give it to the end merchant so that they can find the best shipping option for them. So that is the first business model. where a shipper gets a small cut of every single order that is sold. The second thing is that as merchants grow, or as shipper serves bigger merchants in the SMB space, they're able to help these merchants also do the fulfillment. So shipper currently offers or has about 250 to 270 different fulfillment centers all over Indonesia. So these are mainly in the Jakarta area, which is on the bottom left, but also spread out all over. So because Shipper has a great footprint and increasing footprint, they're able to distribute goods very, very quickly, both from getting it from the first mile, getting it from the merchant, as well as helping them distribute it to all the different other carriers. So that kind of overall capability of will create network effects to help them basically enable coverage all over Indonesia and really have a really strong supply chain. So Shipper is able to help different merchants by picking up their goods and storing them at their warehouse, manage it through their warehouse management system, and then help process orders, fulfill, and then ship through their platform. So this is the overall business that Shipper is doing. They're really serving the merchant in a whole end-to-end space. As they get bigger, they help them with financing, they help them with more data about their customer, and of course, use AI in the back end of all of this. So overall, we really think that Shipper is in a great position given where they are in terms of their business, their growth for the long run to be able to take advantage of the Indonesian market very successfully.
Awesome. Thanks, Mike. With that, I guess overall, a lot of us here are wondering about who are the competitors, what are the competitive landscape look like in Southeast Asia? How do we know that Shipper's here to stay versus large players such as Shopee or Tokopedia?
Yeah, I think that's a great question. The Indonesian market is actually very interesting. We can compare it to the US market a little bit. So in the US market, you have Amazon, right, which is a big Goliath in the market, and they have a lot of market power. I think Amazon represents about 50, 60% of total e-commerce, which is crazy. In Indonesia, you have a little bit of a different situation. You have two major players called Shopee and Tokopedia, and they both own about 30% of the market. So with about 60, 63% total. And then you have a variety of smaller players have their own individual niche, right? You have like Lazada, which is like a Singaporean player that has a store there. You have other smaller players focusing on different verticals, whether it's kind of different types of products like furnishings or home goods, etc. So you have a very what we call a fragmented market. So what these individual players, large players, they also have a fulfillment by Amazon fulfillment type of service. The challenge, and of course, a lot of different merchants would use, let's say Tokopedia or Shopee service. That the challenge is that because it's such a fragmented market, each different merchant would want to sell on most or all of the different websites because they don't dominate one thing. It's not like if you have an Amazon store in the US, you'd be satisfied because you get a lot of you get most of the traffic. There, you need to be on many different platforms. So what Shipper is doing is saying, hey, you can be simultaneously on all of these platforms. We can integrate on the back end on the software, but you can have your fulfillment services in one place. And with Shipper, we're able to fulfill all of your different orders across all of your different platforms. Whereas Shopee and Tokopedia, they want to constrain their merchants into their own ecosystem. So we believe that an independent player like Shipper will really be able to compete. So with respect to the competition, so you have these like large e-commerce players, and then you also have the DHLs of the world, right? These multinational, very large conglomerates, and they're very much about warehousing, shipping things, but they're less of a tech startup. They're less nimble. They're much more bigger, bureaucratic, etc. Where Shipper, we see that they're very, very lean. They have really a great team that are ex-Tokopedia, ex-Amazon, with a lot of experience to do this really, really well.
Great, thanks, Mike. I don't know if many of us here are familiar with the business model. Can you walk us through how does shipper make money, and also in comparison to what they're doing, let's say several years from now, before versus during this market downturn? How do you think that's going to impact the way shippers doing business here?
I think overall, if you think about shippers' business model, they help people do shipping, right? So for every order, let's say if you want to sell something, they help you find the best rate to the best location and then be able to facilitate that transaction. So shipper is able to go to your house, pick up your goods from you, and then deliver it to whatever carrier that you have scheduled. So for every transaction or every order, they get a small percentage, right? They get a small percentage of that. So it's very much about a volume game. So the more volume and the more clients or merchants that are on the platform, the greater the revenue for shipper is. So if you look at where shippers revenue is, we're estimating that they're going to be able to hit about 200 million gross revenue, which is all of the money that coming in. Of course, they pay a lot of that to the shipping company, and their net revenue is about 27%. We estimate 27 to 30% of it, but their growth is basically what we believe, right? Given the fact that Indonesia is going to grow really quickly in terms of GDP, in terms of the e-commerce market, it's going to grow very quickly as well. And then shipper is going to grow with that, and then have more market share. So we really believe that they can grow about 150 to 200% every year. And of course, we have various scenarios that exist where we can kind of basically estimate or kind of scenario plan, different things happening given the economic downturn, right? So, for example, if shippers growth is about 100% versus 150%, or if the revenue multiples are a little bit less aggressive than other scenarios. So we have a general sense of where we think this investment will be laid out.
Great, thank you. And I guess I'll ask one last question on behalf of the audience. Where do you see, shipper becoming the dominant player? What are we talking about, 3 to 5 years? How do we expect the company to turn profitable, and if so, when?
Absolutely. So, right now you know, I would say in terms of profitability, they have a really strong path to profitability in the next year or two, depending on how aggressive they want to grow, right? So what would growth mean for shipper? For them, it would be to find more customers, of course, but also to invest in more fulfillment centers, right? Right now, they have about 270. So let's say they grow to 300, 350, 400, right? The more kind of fixed costs of these warehouses that they hold, the bigger they could potentially get. However, they need to invest in training, in software, in the rents of those places, in the different customers there. So these will be the challenges. So I think overall, they're very really flexible in terms of how fast they can grow because their warehouses are relatively smaller than you would imagine Amazon warehouses. So they're able to grow more or less dependent on the market. So we believe that they'll be hitting profitability in the next year or two if they wanted to. The question is, what is the growth versus what is profitability? So they have a lot of different options there.
Great. So we're gonna now open up, our audience for any questions. If you have, please raise your hand. I see many familiar faces here. Hi, Sam. Hi, Gabriel. If you guys have any questions, please feel free to unmute yourself or raise your hand. All right. I see a question here. Brian, please go ahead.
Yes, thank you. Thank you for that background. I'm just curious if you could just frame the potential exit opportunities for shipper. Is it M&A? Do you believe they're potentially an IPO either in the U.S. markets or a foreign market? Kind of how are you thinking about the both the exit timeline and the exit possibilities?
So in our conversations with the founder, they're very open to different ideas. Of course, the most direct one would be to IPO in the U.S. market. That would basically assume that they're going to raise another round of financing in 2023, 2024, and then after that they would want to go public. The limiting issue there is about kind of the current or the market kind of ability to go public and where the public markets are at that time. So they have a potential to do that, but they also are open to different M&A potential offerings. So they could potentially fit really well with large players who want to get into Indonesia. Think Shopify or different logistics players. They could also be acquired by e-commerce players. So there's a lot of different options for them, and basically the bigger they get, the more attractive they are because the better service they will be providing for their own merchant customers. So overall, I think if we're looking at different scenarios for where we're kind of bringing you in at this deal and then taking you out, we really think that our kind of normal kind of baseline would be a 3x 5x in the next about 3 years. I think so that assumes certain very kind of generalized growth metrics as well as potential valuation multiple. So we're really comfortable in that range. In terms of really kind of aggressive scenarios, we really believe that it can hit, a good 10x or maybe 15x, depending on, of course, where the revenue growth is. So in this scenario, we're estimating that they can grow about 100% per year for the next couple of years, and then that comes down as well as a potential valuation based upon a 3x industry multiple, 3.7x. So, we really see the downside scenario for this company as very, very limited. We don't see it going to zero. We see the customer base increasing. We see the customers really retaining with them. They have a really strong CAC LTV ratio where new clients are coming in really, really well for limited investment. And then the clients stay with them, right? Because if the clients are putting their things there, it's really difficult to actually want to change really often. And the people that you are potentially changing to are really these larger players where have less flexibility and less industry knowledge. So overall, they have really strong retention for the different types of customers they have. And then the Indonesian market is not going to go anywhere. So the downside risk of this deal is really, really low. And then the question is how much upside there is.
No, thank you. And maybe you can kind of delve into that upside. I mean, obviously, we know that the TAM is huge in Indonesia, but as this company, I assume, looks to expand beyond Indonesia, within Southeast Asia. I mean, maybe you can kind of, touch on, what that total addressable market would look like and what kind of ancillary markets, Phil and the team are looking to expand into.
Absolutely. So, I think in different markets, there's different considerations with respect to how the competitors how many competitors are there, and what different type of businesses serving the same clients. So I'll give you an example with respect to the U.S. So there's a company called Shippo in the U.S. that's doing something very similar to what Shipper is doing in Indonesia, right? They consolidate FedEx, UPS, and then offer that type of service to their clients. That company really recently raised at about a $500 million valuation. Except the US company does not do fulfillment. They don't have their warehouses to do fulfillment for their customers. They partner with other ShipBob, for example, in the US, which is a $1 billion valuation company that runs fulfillment. They also partner with other companies doing other services, but for the same customer. The beautiful thing about Indonesia and these emerging markets is that because the market is so new and there's only so many different competitors out there, they can actually do a lot of different businesses for the same customer. So right now they've done shipping kind of consolidation. They've done the fulfillment. They're doing warehouse management software for various larger companies that maybe have a lot of different warehouses that they want to help get managed. And then now they launched last quarter of Q3 a financing solution for different potential clients that want to be able to get some money in as working capital to pay suppliers for their inventory. So this is a different business that a different company in the US would do, but Shipper is able to do that really, really well because they understand the data in terms of transactions. They understand what are the risks related to it. And then, of course, the company is going to keep on going and maybe also infringe a little bit on what Shopify in the US is doing by being able to, on one place, manage a lot of different storefronts. And then finally, grow into other areas in Southeast Asia where they're basically finding the balance between what is the fragmentation of the shipping market and what is the fragmentation of the logistics market. So, there's a lot of different, they would call blue oceans in Indonesia, where there are some competitors, but really, if Shipper can maintain and do really well with their existing customers, they can start serving them in a variety of different type of services that a U.S. company couldn't.
Right.
Yeah, I'd like to jump in, Mike. Thanks for your low base and kind of high scenarios. I would like to really transition with a question that is more on how do you feel about how do you feel the companies would do in an economic downturn?
Yeah, so I think the economic downturn right now has a few different scenarios, right? One is a rising prices for commodities. That's a big part of the current trend, which is really a source of the current Russia-Ukraine war. Because of the Western sanctions against Russia, you have a lack of transport for a lot of fertilizers, a lot of wheat, different types of materials and different metals for various supply chains, as well as energy. So, as I mentioned before, these higher prices, of course, affect the end consumer in the US because we have to pay higher prices. In Indonesia, they're a next exporter for many of these things. So for them, it's actually a boon to them because the government has more money coming in, which means that they can spend more money for their country, right? So we actually see Indonesia themselves have less of an impact from the current high prices in commodities. So we think that their consumer is actually going to be relatively strong. What would hurt Indonesia is more on the China side in terms of Chinese demand for these commodities. So they have different challenges there that are very different. For example, as well, in the recent times in the US, we've had about 8% inflation annualized. In Indonesia, the inflation number is about 3%. So they're not experiencing that much inflation compared to us. Again, they have different challenges there, but I would say this investment in the Indonesian market would be a good type of balance for a portfolio that's more structured in the US because they have different dynamics and it would be a good diversification.
Thank you, Mike. I do want to pause here for a second to see if we have any other questions.
Yeah, maybe I would like to jump in again on that question. I mean, I'm trying to really map out what can go wrong or what sort of risk can arise. I mean, you mentioned eventually the impact of China on Indonesia, but from a player perspective, from a competitor perspective, how likely is it for a large Chinese Amazon-like player to actually penetrate the Indonesian market? Do you actually see this as a threat for the company?
Yeah, so China is already there in the market in different ways, right? So for example, in this competitive analysis, you have three of the major e-commerce platforms. Lazada was acquired by Alibaba back, I would say 5 to 7 years ago. And I actually touched base with a good friend who used to be in the C-suite there to talk about how they view the Indonesian market. And of course, they're investing a lot there, except they have about less than 10% market share in the market. Tokopedia and Shopee, again, were both invested by different Chinese e-commerce players who are trying to get in. So I think the Chinese market players are not necessarily going directly in. JD is going a little bit, but they have really low market share. I think they're more focused on investing in the established players to get the upside and then get the synergies from that. Nevertheless, I feel like, so for example, Lazada, they're already working with Shipper in terms of manage using some of their infrastructure. So a lot of these players, they don't necessarily have to compete aggressively on the backside, on the back end logistics networks. They're more competing against the front end customers, and then the back end is really about their strategy about how they manage their supply chain and be able to deliver a very strong, high values type of customer experience. And whether that's using Shipper or using their own fulfillment services, there's a lot of flexibility there. So we see a lot of different ways that, for example, Tokopedia, they don't have their own fulfillment really. They use mostly merchants for their marketplace model. So everybody, I don't know, everybody's doing something a little bit different, but it's a very competitive market, and we think that Shipper is really in a good place to kind of play all these companies against each other.
Thank you.
Awesome. I see that we have some new joiners as well. Just again, to remind everyone, we're talking about Shipper, Indonesia e-commerce play. And this company, we are raising up to 20 million. And this one, we're raising at currently 600 million pre-money valuation. So if you have any questions, please feel free to reach out to us. Lastly, Mike, I don't think we have gone through the team yet. Can you walk us through the team culture and what makes this a winning team?
Absolutely. So I think one of the interesting opportunities in an emerging market like Indonesia is that even though the population is relatively young and they're very aggressive, you have a lot of new expertise or international expertise going back to bring their associated know-how from the US or Canadian or Australian markets and then to operate there. So if you see the C-suite here for Shipper, you have a lot of people that have e-commerce experience, international experience, as well as consulting experience, and then going back to do one specific thing, right? So of course the team is led by Phil, who's the CEO. He was a previous investor at Floodgate, which is a top tier VC in Silicon Valley. He was at McKinsey as well, and then did his degrees at Columbia and Stanford. And then for many of the other founders or C-suite professionals, they have a lot of experience at Tokopedia. For example, Marvin was an engineering lead there, or Andre, a product manager or head of business at Tokopedia, and then Agus, who is at Amazon, right? So everybody has a very expansive experience, really focused on the customer, really trying to create a very high functioning startup team and approach it as a technology company, not a warehouse company, but a technology company that's helping merchants with their back-end logistics, but hopefully more going forward. So we really see the team as really strong, and they have about 150 people now, or maybe 200, more on the warehousing side versus kind of the office side, but they're growing very, very quickly. And then finally, right now with the current issues with respect to the downturn, one of the interesting things that we've been thinking about is how efficiently are they growing, right? And there's a popular concept called the burn multiple. For every dollar that you're spending per month, how much revenue are you getting per month? And really good metrics there. If you're spending $1 to get, let's say, $3 of revenue, that's great. If you're spending $3 every month to get $1 of revenue, that's really bad. So these guys are doing that. Their number is about 0.7, which means that they're able to, for every dollar they spend, be able to get a lot of revenue, 70 cents on the dollar, which is very, very high in the current kind of metrics oriented, which means that they're really going to start increasing that number in terms of how much investment they're going to have in the company versus how much revenue they're getting out. So we feel like they're very capitally efficient to be able to consistently build and grow with the Indonesian market.
Thanks, Mike. Hi, Elliot. Thanks for joining. Do you have a question to ask here?
Sure. Yeah, I hope that it's not too loud where I am. Currently in Rwanda, and there's a lot of celebrations going on around me.
Great.
This sounds really cool. I missed the beginning of the session. What's your timeline for growth, like in terms of your go-to-market strategy?
Yeah, so for this company, they have been around for some time, and the business has now probably a 1 to 2 year timeline until IPO. In our opinion, that once they complete the monetization strategy, and right now they have a pretty aggressive growth plan ahead. We think that this company is probably a 3 to 5 year, 5 to 10x in a most positive, optimistic view. Conservatively, we think in next 1 to 3 years, probably between 1.5 to 3x return. So that's why we think we're excited about this opportunity, and with this, ambition to grow beyond Indonesia into other parts of Southeast Asia. We also would love to help this company go international. One day maybe in Africa. So love to learn more about your adventures in Rwanda.
Yeah, and I apologize, I didn't hear the beginning part. But it seems like an amazing company. Let me know how I can help. I've also done a good bit of maritime shipping work in East Asia, so Hong Kong, Eastern China. But yeah, there's a lot of really interesting port cities here that I think could benefit. A lot of inefficiencies in the local economies here. So I think with improved data, also more bridging the digital divide here, folks, the people here are just gonna have a lot of data that they're not gonna know what to do with, and optimizing that is gonna be a huge problem. So, and of course, the bigger the problem, the more valuable the solution. So, yeah, looking forward to reading more about what you guys are doing.
Thank you,
Elliot. Let me know how I can be helpful.
Yeah, I love how you strike on the data play. I think this is a huge play as well. Given that we're talking about economies where data on consumers and also your user base is generally hard to capture. With these developing solutions in fintech, with logistics play, a big part of it is building a SaaS business and gathering more information on data so we can improve the process ever more. So thanks again for the insight. Do we have any other questions from the audience? We always love to involve our investors in also helping the companies grow in whichever way possible. So just wanted to reminder, if that's interesting to you, please also feel free to reach out to us.
I guess you have the slide up there. I mean, maybe you guys can talk a little bit more about the investor base and kind of who is backed, Shipper to date, and are there any strategics that are coming in this particular round? Looks like a very blue chip list of investors. Maybe you can expand upon that a little bit.
Yeah, absolutely. So they started out as a YC company. Again, the CEO Phil, he was a chief of staff at Floodgate, a Silicon Valley based VC. So he saw this opportunity and got into the Y Combinator system and was able to successfully raise a seed round after that by Lightspeed, which is tier 1 VC based in SF. And then Insignia Ventures, which is a very Indonesian or Southeast Asia heavy, really strong investor there. So since then, they've grown very well, in terms of their kind of network on the ground, their ability to act very quickly and then bring really strong people in. So their Series A was during the pandemic. Of course, Indonesia suffered like everybody else during the pandemic. But Naspers, which is a great VC out there, came in as well. And then for their Series B, they had DST Global and then Sequoia India come in. So Sequoia India is a really great investor in a lot of the different e-commerce companies. So they're an investor in Tokopedia, one of the big kind of e-commerce platforms, companies like Amazon in Indonesia that we've been talking about. So for this round, for the Series C, they've already raised 70 million. That's already closed, and now they're finalizing that round. But Sequoia and all of the previous investors are back in this round at their pro rata or greater. So everybody is very, very supportive of the company and how they're doing.
Great. Thanks, everyone. Do we have any other questions today? Okay, well, if not, please feel free to reach out to us. As always, we like to bring high quality deals to our audience, and our minimum investment has actually lowered. So we used to do 100, but right now, you can start with 50,000. Also, we're launching our new platform in the next 2-3 weeks, so please stay tuned. We are going to do this webinar every other week. So our next webinar will be basically the week after next. So please let us know if this time works for you, and if there's an alternative time that works better. We are also, always looking to improve our operations here. So again, thanks everyone for joining, and please, stay tuned.